Australia's December quarter GDP numbers are the major economic highlight this week. Joining me now is business reporter Edward Boyd. Ed, there's a possibility Australia's economy could have gone backwards in the final quarter of 2023.
That's a possibility some economists have been talking about over the past few days. Remember, these numbers come out on Wednesday, so the predictions have been slowly rolling in. And remember, the main thing that holds up Australia's economic growth is household consumption, consumer spending. We know there's difficulties with cost of living. People have been cutting back on their expenses. This is the GDP quarterly forecast. So you can see the consensus is for a plus 0.3%. Westpac, though, believe we're not going to see any economic growth in the December quarter, and it could potentially go negative. The other banks there, you can see NAB, CBA at plus 0.2%. ANZ at plus 0.3. But if we go to the next page, this is the annual growth rate. You can see consensus is for 1.4%. And that would be the lowest level since 2000 of annual economic growth outside of the pandemic. Obviously, there was some tough years in the pandemic, but excluding those, 1.4% growth would be the lowest economic growth in Australia since the year 2000. And then you can see ANZ there with plus 1.5% for the year. But economists are talking about how this year is going to be a lot better for Australia's economic growth. The second half of this year, that is, once the new tax breaks come in. So the stage 3 tax cut changes, people are going to have a little bit more money in their pockets. They're going to be spending that money in the economy. Wages are also rising and inflation is falling. So we could have a few bad quarters of economic growth really until the Q3 of this year. So from July onwards is when economists expect things to get back on track and get a little bit better.
Okay, but these numbers have pretty big implications for the share market and interest rates, don't they?
Absolutely, they do. So, for example, right now the stock market is actually at a record high. And if the figures come in as a bit of a surprise on Wednesday, it could have serious implications for where the market goes. This is what the market's done this morning. It's gone above its record high by about 3 points, but there's not a lot of trading activity this morning, so it is a pretty quiet day on the ASX 200. The other thing, though, is for interest rates. So if Australia's economy does print negative in that fourth quarter, then the Reserve Bank's probably going to they're obviously doing a press conference later this month when they do their next board meeting, and they could talk in detail about how weak Australia's economy is and how the impact of interest rates is really being felt on the economy. In other words, they could start to bring the cash rate lower earlier than expected. So that's the implication there. If the economy does either print very low, around 0%, 0.1% in that December quarter, probably means interest rates are going to come down a bit sooner, Laura.
Okay, like that, Ed. I'll see you soon.